to do with understanding the divers of the market, like knowing the different types of traders, scalpers, what again, day traders or day trading, and then also swing trading as well as position holding. So afterwards, we also came to discuss. We discussed that you also have to know market trends, and we identify the three trends of the market. That is uptrend, downtrend, and then also sideways. Yes. So we intend that this evening we will get back. We are going to take the lesson in series in bit by bit. Okay, so we are not going to rush, but I will just have to make sure that we show up and then we learn something new. We discuss something meaningful, which can build you and put you through your journey. Okay, so that's how it's going to be. Yeah, and finally, I said if time permits, us, we may add support and resistance, but I'm not going to keep long here. Um, yeah, we are going to spend like 30 to 45 minutes here. So, anyhow, we are going to do it. If time permits us, we'll do more. If time do not permit us to, um, if God permit tomorrow, so in the morning we will still meet. Then in the evening will be business presentation. Yeah. All right. So, I hope we are good to go. I hope we are good to go. Right? Are we good to go? You guys can hear me very loud and clear. Hmm? You guys can hear me very loud and clear. So, as we discuss, we talk about the types of what? Types of traders. And we rightly said one of the main things that you should it's to help you if you able to identify um the type of trader that you find yourself being, maybe if you are a scalper or a swing trader or a day trader. What helps you is that one, these forms of traders were able to know the time frame to do what time frame to use. So first is time frame, then also it also helps you to handle risk management. So even though yesterday we talked about risk management, but risk management can properly be understood if you know the type of trader you find yourself. So in the morning, explain the fact that, for instance, when it comes to risk management, if a trader is a scalper, the risk decisions that he makes is different from the risk decision that a day trader will do or to make. So we don't just trade. Do you get it? Mind you, this is for beginners class, and as a beginner, you need to know the basis of the market, understanding the basis information that you need to know to grow. You don't just become a trader by accident. That is one thing that you should know. Even if you got here by accident, you should navigate your way out. Do you get it? You should navigate your way out. And Royal Q is a perfect academy that can help you, especially Royal Q Evolution. It's the best academy that can help you to grow because we are so focused on building individuals who are willing to grow every single day. So this evening, our focus is to help you one understand time frames. Time frames. Depending on the different categories of traders. So if we talk about day trading in as the first point, as a day trader, what is the best time frame to do or to use? If it is scalper, as a scalper, what is the best time frame to use? Okay. But before we delve into the time frame, let me ask you this. Let me ask you, what is a time frame? When we talk of time frame, what is it? What is time frame? Let me first get back to you to see to test your knowledge. What do you know about time frame? When we talk of time frame, what is time frame? I hope you guys can hear me. I'm seeing someone is complaining about the network. He said, this current network even allow us to stay online for this tutorial. Uh Let's see. I hope you guys can hear me though. Yes, so when you talk of time frame, what is time frame? Oh, okay. All right. So, guys, I'm asking you a question. When we talk of time frame, what is time frame in the first place? Okay. What is time frame? All right. Period covered. Period covered. During duration taken to form a complete candlestick. A duration taken to form a complete candlestick. So, is the range of minutes or hours to trade. The range of minutes or hours to trade. Yes. So again, duration taken to form a complete candlestick. Then also a period covered. A period covered. A period covered. All right. So again, when we talk of time frame, what is time frame? I want to see your fair knowledge about time frame. When you talk of time frame, just present your fair knowledge about it. I just want to know, what do you know about time frame? Just present something small to us. When you talk of time frame, what is it? Yes, I have all the people here, so I want to see you talking. I want to see you talking. All right. So now, like we are saying, time frame. We cannot discuss about trading without talking about time frame. Time frame is really important. Okay, time frame is really important, especially when you know the type of trader that you are. So first, when we talk of time frame is an interval. Okay, time frame is an interval taken for a candle to open and close. An interval taken for a candle to open and close. That is the meaning of a time frame. Do you get it? So before a trader can be able to trade, the first thing that you need to be familiar with is time frame. And basically, we know that on a chart, every single candle, either it is a bullish candle or a bearish candle, flows within a particular interval. And that is what we term it as what time frames. So, for instance, we may talk about the 1 hour time frame. So basically, when we talk of 1 hour time frame, what we mean is that this particular candle opens and closes within a period of what? Of 1 hour. It opens and closes within a period of what? Of 1 hour. If it is this candle, it opens and closes within a period of what? Of 1 hour. Please, do you get it? So, if I want to trade and I understand time frames, I know that when you talk of time frame, that is the interval, a candle, one candle chooses, or one candle opens and closes. Now, I know Coach Mo has already taught you guys on candlestick patterns. And basically, a time frame represents the attitude of traders. A time frame represents the attitude of what? Of traders in a market. Listen, a time frame represents the attitude of traders in a market, which simply means, should I use the word attitude or behavior? Anyway, so which simply means if a trader is behaving himself very well in a market, as in the trader find himself that the market is smelling very good enough, something very good enough, that trader may behave in a different manner as compared to another trader also sensing that the market is very risky and then also dangerous to go in. that trader too may behave very different in the same market. Do you get it? So in that case, there are some traders who prefer to look at the picture of the market on a lower time frame. So when we say someone is looking at the picture of the market on a lower time frame, it simply means with that particular person, let's say 5 minutes. 5 minutes, that person is considering 5 minute time frame, which simply means on a candle that opens and closes within 5 minutes, that person is considering at looking at this particular candle to open and close within 5 minutes, which simply means he is going to read the chart from the previous candles, from the previous last 5 minutes, that has happened, that is past. So if these three candles, 5 minutes, 5 minutes, 5 minutes, 5 minutes, which is 15 minutes. So this trader is going to make decisions on this time on the 5 minute time frame, looking at the picture on the 5 minute time frame. That is where that particular trader will do to make his decision. Now, mind you, another person is also looking at the picture on 1 hour. Another person is also looking at the picture of the market on the 1 hour time frame. Let's look at the difference before we talk about how the reason why different traders chooses different forms of trading or different time frames. Sorry. So if a trader is looking at the 15-minute time frame on the 5 minute time frame, let's say this last previous candle, which is these three candles, at least would give the trader information. There is also another trader looking at the same market on the 1 hour time frame. Now, on the 1 hour time frame, it will take how many 5 minutes will give us 1 hour? Can you do that calculation together? How many 5 minutes? If it is 5, how many 5 can give us 60 minutes, which is 1 hour? Yes. Am I asking the right question? How many 5 minutes can give us 60 minutes, which is 1 hour? 12. Very good. 12. Very good. 12. Very good. 12. That's correct, right? Is it 12? Is it 12? Okay, very good. Very good. Which simply means this trader who is using the 5 minute time frame would have to read this chart on the 5 minute time frame 12 periods, 12 candles, 12 bigger candles, 12 candles, to be able to understand what has happened in the past and what is likely to happen. But a trader considering the 1 hour time frame will just use one candle, understand just one candle to know what is capable of what is capable of happening. Do you get it? So when it comes to different forms of traders, now talk about first scalper. Scalper. Talk about scalper. Now, a scalper consider the lowest time frames. The lowest what time frame? Why? Because he is considering what is happening within this short period of time, like maybe 1 minute to 5 minutes. That is what a scalper is considering. Which simply means if a scalper consider information on the 4 hours and then also even 30 minutes, he might miss his opportunities. That is one. Two, he might view the market from a wrong perspective. So scalpers mostly focuses on 1 minute. focuses on from 1 minute to at most 10-minute time frame. At most 10 minutes time frame. That is what scalpers focuses on. So a scalper develop interest on the lower time frame, which is from 1 minute to 10 minutes for scalpers. Why? Because he is observing the market from a different perspective, where he might see traders fighting in the market with a low perspective. Do you get it? Which simply means if you are a trader and you don't know the type of trader that you find yourself being, and you see because a scalper has been making some profits, this same scalper can also lose huge, and I'll tell you the reason. Do you get it? And I'll do what? I'll tell you the reason. So, in as much as this person is focusing on the 1 minute to 10-minute time frame, there is also the opposite side of it. Let's look at the opposite side of focusing on these particular time frames. Now, if a trader focuses on this time frame from 1 minute to 10 minutes, from 1 minute to 10 minutes, sometimes it is difficult to see the bigger picture of the market, which simply means this trader do not anticipate to see what you call the bigger picture. Scalper does not anticipate the bigger picture of the market. Take notice. Scalper does not focuses on the bigger picture of the market. They focus on the instant picture of the market. Do you get it? Scalpers do not focus on the bigger picture of the market. They focus on the instant picture of the market. So they derive temporal information. Scalpers derive temporal information, which simply means if you want to be a scalper, you don't need to look at the market from the bigger picture. When I say the bigger picture, like considering higher time frames, no, you don't need that. Yours is to read the market from a lower perspective. Please, do you get it? Do you get it? Are we together? Do you get it? Like I said, we are not going to spend my time here. I'm going to spend just 30 minutes here. So I'm following the session consistently without wasting my time. So let me know if you get it. Do you get it? All right. Okay. That is awesome. Good. Let's proceed then. Now, day trading. Day trading. Day trading. This is where I would say majority of it falls. Okay. We fall within this category of the market. Most traders are day traders. Most traders are what? Are day traders. Now, why do people choose day trading? So, talk about day trading on the time frame. What are the best time frame that the day trader can use? One, day trader can use two different time frames. First, can use 15 minutes, 30 minutes, and then also 1 hour. 15 minutes, 15 minutes, 15 minutes, 30 minutes, and then also 1 hour. So either 10, 15, 30, 1 hour, it's okay. Then some also uses 15 minutes, 1 hour, and then also 4 hours. So as a day trader, if you are considering the best time frame to use, these two time frames are considerable. They are good. Personally, I use 15 minutes, 1 hour, and then 4 hours. 15 minutes, 1 hour, and then 4 hours for day trading. So choose to use 15 minutes, 30 minutes, and then also 1 hour. Now, why do you use three different time frames? 15, 30 minutes, and then also 1 hour. This is the reason. This is the reason. Now, on every chart, as we may not get there, but if God permits, maybe tomorrow we will do that. Every chart or every trader looks at the markets from three different perspectives. One, after a trader has been able to identify a trend, the first thing that the trader considers is the structure. The structure. Okay. The second thing that the trader considers is confirmation of the structure. And then also the third part that the trader considers is what is entry. So basically, when we talk of the structure, we are talking about the general trend. The general trend. So if a day trader is trading, first he analyzes the markets from the structure. He analyzes based on the structure of the market, which has to do with if it is the highest time frame, that is 1 hour. 1 hour time frame. So 1 hour time frame will give you the structure of the market. Will give you the general overview, the general trend. Then the 30-minute time frame would help you to confirm the structure of the market. So if I want to make an entry based on this confirmation, then I'll use the 15-minute time frame to make an entry. Please, do you get it? Let me know if you get it. If it is 4 hours time frame too, if I'm also using the other structure, I'm also going to use 4 hours as my structure. 4 hours as my structure, and then 1 hour 1 hour as my confirmation, and then also 15 minutes as my entry. I hope you are getting it. Please, do you get it? Let me know if you get it. Do you get it? Do you get it? Let me know if you get it. Do you get it? Let me know if you get it. 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 Okay, so now, all right. Okay, now what we are saying is simple. We are talking about time frames, okay, and how time frames impact your trading decision, and how it also impacts the type of trader that you find yourself being. So we first talk about scalping, then also we are talking about day trading, and we are saying that as a day trader, you can entirely use analyze the markets from this perspective. One, using the 4 hours, 1 hour, and then also 15 minutes time frames to analyze the charts. With the 4 hours becomes your structure. You use the 4 hours to analyze the structure of the market. And we say when we talk of the structure in the morning, we said another important thing that every trader should know is what is the trend. So first, the structure is about the trend. Identifying the trend is what you mean by the structure. Okay. Then we also have the 1 hour time frame. The 1 hour time frame helps you to confirmation. It helps you to confirm the structure, what you've identified, the structure that you've identified. The 1 hour time frame will now help you to confirm that structure. Then we also have the 15-minute time frame. So 15-minute time frame would help you to make an entry from the confirmation. That is what we are saying. So having a chart, okay, having a chart, the easiest way to go about it, after you've got your this understanding, You know that as a day trader, you are not going to use 1 minute time frame or maybe 5 minute time frame within this. So when someone is discussing about 5 minute time frame, your responsibility is not to take decisions or is not to make decisions on the what, on the 5 minute time frame. You focuses on what, on this, either 4 hours, 1 hour and then 15 minutes, or 1 hour 30 minutes and then also 15 minutes. These are what day traders do, what day traders uses. So if we're a day trader, the point of discussion is that if you are a day trader, the first thing that can help you, or if you are a trader, the first thing that can help you is to identify the type of trader that you find yourself being. If you are a day trader, don't let a scalper frustrate you. It simply means you don't know who you are. Do you get it? If you are a scalper, day trader confuses you, it simply means you don't know who you are. But in the morning, we said the first thing that can help you to be a good trader is first identifying yourself and knowing who you are. Knowing who you are is about knowing the type of market to trade. So we discuss all these things generally. We discuss about all these things and even the type of market, like either spot market or futures market. Um, is it 3 years or 4 years ago? We went for a conference and then I met a guy. So after we discussed various parts of the market, this guy was like, he personally he has never traded on the futures market before. I was like, really? Like for real? He said, yeah. He has never traded on the spot market, futures market before. All what he does is he does spot trading. And for the past years, he has been doing spot trading. I was like, wow, that's nice. But some of us, even though we do spot trading, then we also do futures trading as our major and then the spot trading as our normal market. He said no, for him, all his major market is the spot market. I asked him why. He said yes. Actually, he has traded the two markets and he feels like the spot market is okay for him. I was like, no problem. You understand the psychology of the market. So I don't have any issue with you. So it's all about what? Knowing who you are and what you want in the market. So if I know who am I and what I want, I'm a day trader. Do you get it? And as a day trader, this is what I want in the market. So I wouldn't let someone scalper confuses me. So even signals, the signal that you do trade, listen, the signals that you do trade may come from different traders from different perspective in the market. Which of them do you trade? That's the question that you need to ask yourself. Do you get it? Which of them do you trade? The signals that you do trade come from different traders with different perspective. Some are scalpers, some are swing traders, some are day traders. Which of them? And even if I may choose to add, some are also gamblers. Let me add that one to it in addition. So which of them do you trade yourself? Which of the signals do you trade? Do you trade signals based on scalping? Do you trade signals based on day trading? Do you trade signals based on swing, or do you trade signals based on gambling? Hmm? I must be fair to you because we are building a foundation, right? I must be fair and honest to you because we are building what? We are building a foundation. I believe you get it now. So 1 hour time frame, sorry, 4 hours time frame as a structure, then what again? 1 hour as your confirmation, and then 15 minutes as your entry. Is a message home? Is a message home? Tomorrow, if God permits, we will look through the charts. Look at the 4 hours time frame. What to do? What happens on the 4 hours time frame? And what does the 4 hours time? How does the 4 hours time frame differ from the 1 hour time frame or the 15-minute time frame? So we talk about. Mind you, write this information down because whatever we are discussing, I'm just going to extend it anytime we meet. Mind you, in the morning we met, we discussed something and I'm extending it. Right? I just have about 10 minutes to end this session. Like I said, I'm going to use that. We are using just 30 minutes because I don't have my time. I'll be going somewhere very soon. So yes, so that is it. So 15 minutes for 1 hour for confirmation, and then also the 15 minutes for entry. As that's for day trading. That's for what? Day trading. So understanding this may help you a lot in your journey. This is what this is what you can say, and when you can see that you know what you are doing in the market. So you just pick up a signal to trade, and then you don't even know either this signals is scalping, this signals is for day traders, this signals is for swing traders. You don't even know. You get it? So we are building you to be an independent trader who can make firm decision on his or her own. Is that good? Is that good? Is that good enough? So in the morning, we define who a swing trader is. In the morning, we define who a swing trader is, right? In the morning, we define who a swing trader is. So basically, when we talk of a trader, these traders open position or they open trade on a midday term or a long term, not too long. So let's say a day trader is just focusing on a day, but a swing trader focuses maybe within 2 days, 3 days, or midweek. Yeah. So he focuses on if this, he analyzes the charts from the perspective of maybe the whole week or maybe 2 days or 3 days. That is for swing traders. So once you are anticipating results, instant results, or maybe daily results, a swing trader observe the market from a broader perspective, and then also ensure that if by the end of this week, how would they perform? By 3 days, how would this market be? By 4 days, how would this market be? By 1 month, how would this market be? So that is it. Do you get it? So swing traders do not just focus on a short period of time or a day, but days. The focus is on day or week or weeks. Yeah. So for swing traders. Now, what is the best time frame for a swing trader? Let me end with that part. The best time frame for a swing trader. First, so minimum, I'm giving you three. Okay. So a swing trader minimum focuses on first 4 hours, 1 hour, and then also 30 minutes. That is the first. Second, a swing trader focuses on 1 day time frame. Did I say 1 day? 1 week time frame. 1 week time frame, 1 day, 1 day, and then also 4 hours. Okay. Then the last part of it, some also focuses on 1 day, 4 hours, and then also 1 hour. 1 day, 4 hours, and then also 1 hour. So a swing trader who is looking for easy results uses 4 hours, 1 hour, and then it's 30 minutes. Do you get it? Then a swing trader who wants to stand in the middle of the game uses the 1 day time frame, 4 hours, and then also 1 hour. So 1 hour is going to be his confirmation. Meanwhile, a day trader is using 1 hour as a short structure. So look at the difference. So just look at the difference. That is the reason why I'm telling you that it is better for you to know who you are in the market. Do you get it? It is better for you to know who you are. When a swing trader is using 1 hour as an entry, a day trader is using 1 hour as a structure. Look at the difference. I don't know if you get what we are communicating here. Look at the difference. Whilst a day trader is using 1 hour as his entry point, a swing trader is using 1 hour as his entry point. A day trader is using the same 1 hour as a structural point. Do you understand what we are discussing here? Let me know if you are with me. Please, do you understand what we are discussing here? Do you understand? Do you understand what we are discussing? Do you get it? Do you get it? Someone is saying no. Do you get it? Let me know if you get what we are discussing here. Do you get it? Hmm? Do you get it? Do you get it? I have about 22 people in the class. Only 3 people are showing up in concern, answering. I don't know if you that you are watching, either you are watching or you are not watching. There is this type of thing where people join Zoom, then they put their phone somewhere and they use AirPod to be listening. They will just be walking here and there without focusing on the Zoom. Okay, now listen. We are talking about time frames. The discussion is still on time frames. Okay. Now we said from what we discussed in the morning, we said we have different types of traders. Now, each trader and the time frame he uses in the market. If you don't know this, you might mess up. Why? Because different traders with different perspective or different purpose in the same market. In the same market, different traders. Why are they different traders? They are different types of traders, and different types of traders focuses on different time frames. So the discussions on time frames, and what we are saying that the last part of it is swing traders. Swing what traders. Now, what time frame can a swing trader use? If I want to be a swing trader, if you want to be a swing trader, we are giving you the information. What we are saying is that one, some swing traders uses 4 hours, 1 hour, and then also 30 minutes. Some also uses 1 day, 4 hours, and then also 1 hour. Okay. And then the last part of swing traders also uses 1 week, 1 week, 1 day, and then also 4 hours. So now the first one is for a swing trader who is looking for fast opportunities. The second one is for a normal swing trader. Every swing trader uses 1 day, and not like the normal swing trader. And then we have the um swing trader where his focus is on long-term view. Use the 1 week, 1 day, and then also 4 hours. Mind you, we define swing traders as people or traders whose focus is to trade in more than a day, a week, or weeks. Do you get it? So he may anticipate results in a day, in days, week or weeks. Do you get it? So these are the various time frames that swing traders uses. So you can also decide if you want to be a swing trader, you can decide on using any of these time frames. So what I was trying to mean to you is that if you don't know the type of traders and the type of time frame they uses, you might mess up your trade. Why? Because for instance, a day trader uses 4 hours, 1 hour, 4 hours as the structure, 1 hour as the confirmation, 15 minutes as what? As entry. Or a day trader use 1 hour as the structure, right? 30 minutes as confirmation, 15 minutes as what? As entry. In the same lesson, there is a swing trader who is using over here 4 hours happens to be the structure, but this swing trader is using 4 hours as entry. Are they the same? The 4 hours that is being used as structure, another person on the as a day trader, swing trader is using 4 hours as entry point. Do you think they are the same? That's the question that I was asking. Are they the same? They are not the same. That is what we are trying to mean. They are never the same. Someone using 4 hours as a structure and someone using the same 4 hours as an entry. do you know what do you understand what we are discussing? Eh? Do you understand what we are discussing? My time is up. Hmm? Do you understand what we are discussing? Do you understand what we are discussing? Let me know. So the point is that same market, different traders with different perspectives. Do you get it? So if a day trader is using 1 hour as a structure, a swing 4 hours as a structure, a swing trader is using the same 4 hours as an entry. And we are saying they are not the same. So if I'm a trader, first, we were talking about knowing yourself. That is how we got here. Okay. So knowing with a lot of things in the market. Do you get it? So that is the point of discussion. At the end of the day, understanding the time frames would help you to know the type of trader that you are. If I'm a day trader, I know the time frame to use. If I'm a swing trader, I know the time frame to use. If I'm a scalper, I know the time frame to use. So you wouldn't just go out, you tell your colleagues you are a trader, they ask you what time frame do you use, and you are there embarrassing yourself. You don't even know the time frame you use because you don't even know the type of trader that you are. You, what type of trader are you? You don't even know the type of trader that you are. Are you a day trader? You don't know. Are you a scalper? You don't know. Are you a swing trader? You don't know. Then what type of trader are you? Are you a mumu trader who just go into the market to trade without knowing what he's trading? Then you are just trading money or what? What are you trading? Do you get it? So we are building a foundation, a solid foundation where traders will know who they are, they know what they trade, and they know the kind of money they anticipate to make in the market. We are still building a lesson. Don't rush. I'm going to end here for today. If God permit, tomorrow is another day. We will meet again. Let me give you the opportunity to ask your question. Like I said, those who joined earlier, I told you that today's session, we're just going to spend 30 minutes. And honestly, we spend more than 30 minutes here, almost 53 minutes here. Yes, it's enough. So that is the discussion. This evening session was about time frames and how time frame works in the market. Different traders, different the same market, different traders with different perspective, how they see the markets and also how time frames impact their decisions in the market. All right. So if you have any question, let me know or let me have your question. You can raise your hand or you can write your question in the chat box. We reply you, then we bring the session to an end. Let me know. Okay, so there is one hand up. Okay, so you've been asked to unmute. You can ask your question. Safi, you can ask your question.
Yes, good evening, leader.
All right, good evening.
Thank you for the lecture. So I just want to ask something simple, and it's always confusing me about the time frames. You're saying one can pick 4 hours for structure, and then 1 hour for confirmation of structure, and then 15 minutes for entry. Now, there are some cases whereby you can find out, you can find that the market, let me say in 4 hours, you can find out that it is uptrend, right? And then maybe use the
Mm-hmm.
indicators also to confirm, like in 4 hours, you can find your stochastic maybe in oversold area, whereby you anticipate the market to go high. And then if you come and check in, let me say, for 1 hour, you find that the stochastic RSI might be bearish, like kind of consolidation, and then in 15 minutes time you find that still It can be either bullish or bearish, depending on. Sometimes you find that they are not aligning. So, what is the best time for someone to abstain from that trade?
Okay. All right. In as much as I didn't get your question or your questions, I got the concept from your question. So let me answer that. All right. So now, one interesting thing about time frames and what can impact a trader to make a good decision is this. Let me write it. You mentioned the word right. So is this alignment. Now, 4 hours, 1 hour, 15 minutes. Something good may happen here. Something different may happen here and then also here. The only time to enter a trade is when all these four align. That is the only time, and we may not discuss that this evening. There are more to the time frame that I would prefer we discuss that in the if God permit tomorrow. Alignment is key to your trading. So if let's say this is bullish, this is bearish, and then also this happens to be bullish, there is no alignment. And if God permit tomorrow in our session, we may discuss when to make an entry, especially when traders does not align, or what to do when market does not align. What helps traders to make firm decision after identifying the structure and then it's confirming the structure. You can make an entry when the structure, the confirmation, and the entry align. They are all speaking the same language. So I believe that this answers your question. That is alignment. So if there is no alignment, you just need to ignore or you wait to see if they all align in time. If you all don't align, you wait till the perfect moment. That is the reason why we say one of the difficult moments in traders' lifetime is waiting. When we talk of patience, it's not just about waiting for an asset to close or something, but waiting for your entries to waiting for your setup to make to hit an exact entry point. That is when we say that a trader is having patience. Sometimes your setup does not align. So your 4 hours, your 1 hour, 15 minutes, that is what we call the setup. It doesn't align. So since it doesn't align, all what you can do is to wait. Please, do you get it? So that is it. So probably if God permit tomorrow when we meet, we shall amplify that part of the session. So don't worry. Thank you.
Okay, thank you too.
All right. So let me check. Okay, so when looking on time frames, how many candles a trader should consider? How many candles? No, we don't have what you call multiple candles to consider. But then looking at the time frames, the candles are there to help you read from what has happened in the past. Okay, so I believe this question would rather lead us into tomorrow's session. So please, if God permits, I want to use this opportunity to invite you, Furaha. Furaha, right? I don't know if I've been able to pronounce the name right. I want to use this opportunity to invite you. If God permit tomorrow, I'll teach your question in full. So please get prepared and then meet us here tomorrow if God permits. All right. Then what makes the trader who uses 4 hours as entry different from the trader who uses it for structure for entry? Okay, so this is it. This is it. What makes the difference? Now, like I said, someone is using 4 hours as structure. Now, someone is also using the same 4 hours as entry. Okay. Let me quickly finish and then join you guys. Okay, so sorry guys. Let me quickly answer your question. I think I have to. Okay, so all right. So someone is using 4 hours. Someone as structure. Another person is also using same 4 hours as what as entry. Now, what makes the difference? Let's look at it. The person using 4 hours as structure sees that this is the bigger picture. He is seeing this as the bigger picture. And the person using 4 hours as entry sees that this is the lowest picture. So it comes via respect. What I'm expecting, my expectation is different from your expectation. That is it. So the difference is about expectation. Listen, if someone is using 4 hours, that person sees that what can easily happen on the 4 hours time frame, and then this person also sees that what can happen is different from what can happen here or what may happen there. Do you get it? So at the end of the day, the person using the 4 hours time frame sees that that is the general trend of the market. I don't know if you get it. What you are trying to mean is that 4 hours, okay, as a structure, that is the trend. The structure gives you the trend, okay? Good. Now, that person uses 4 hours as structure, but this person using 4 hours is not using the 4 hours as structure. He is rather using maybe 1 day as the structure, and then this 4 hours as the entry. So if any mistake would happen from the 4 hours, that person who used the 4 hours as entry is safer as compared to the person who using the 4 hours as structure. Do you get the difference? The person using the 4 hours as entry is more safer in the market as compared to the person using the 4 hours as structure. I don't know if you get it. Please, do you get it? Let me know if you get. Very good. Very good. So that is it. That is the exact point. So in terms of, mind you, in the morning we said the time frames, knowing the type of trader that you are, also it helps in 2 ways. We said first, we talk about the fact that we talk about risk management. Risk management. So in a case, mind you, if this person would have to, if these 2 traders would have to use stop loss, they are not going to use the same stop loss. That is the difference. So in terms of risk management, they are all going to take different risk management structures in the market, because one is using 4 hours as a structure. Meanwhile, the person using the 4 hours, he is not using 4 hours as the structure. He is using as the entry, which simply means he is having a bigger view of the market as compared to the person using the 4 hours as structure. Just like scalping. If just imagine someone is using 1 minute as 5 minutes as what as his structure, because he's a scalper. 1 minute to 5 minutes, he's using 5 minutes as the structure. And then you are using 4 hours as your structure and then 5 minutes as your entry. Do you think the 2 of you are going to use the same stop loss or the same risk management tool? No. And if liquidation should happen, this person will be liquidated before you will be liquidated, because you are using 5 minutes as what as entry, and he is rather using 5 minutes as what as structure. All right, thank you. So I believe I've been able to explain your question very well, and it's very clear. All right. So Wara, I'm sure now you get it. You said please elaborate. I'm sure I've done that elaboration. So guys, that is it. That is it. So if God permits, we shall meet again tomorrow. If God permits, we shall meet again tomorrow. Let's all go prepared. We shall meet again. It's all about learning, and learning is not about speeding. It's just about having the right strategy. Like I've always been saying, everything's about speed, strength, and then strategy. So we move with this 3S: speed, strength, and then what? Strategy. So our lesson should be strategic, right? So that is the foundation that we are building. So please, if God permits, we shall meet again tomorrow. Thank you. I know that this 1 hour that we've spent here is more meaningful and more impactful. Go and think about it. Go and learn more about it. We shall meet again tomorrow if God permits. Thank you. God bless you and have a good night. All right.